What is happening, crypto enthusiasts? Get ready for a rapid-fire update that's going to blow your minds. The market is moving at warp speed, and if you're not plugged in, you're missing out on the biggest plays. We've got game-changing strategies from major players, eye-watering figures shaking up the financial world, and bold new ventures ready to redefine the future. This isn't just news, it's the pulse of the digital asset revolution, and you're getting it first, right here, right now. Stay tuned because you absolutely do not want to miss what's coming next. Let's dive in. First up, a major player is making a massive pivot, betting big on a coin that's often called digital silver. They're talking about significant funding and a strategic shift that could unlock massive potential. What does this mean for the altcoin landscape and your portfolio? We're breaking down the details that matter. Then, we're shifting gears to look at some truly staggering numbers that put one of the biggest digital assets on par with traditional finance giants. We're talking billions in daily volume and a growing dominance that's rewriting the rules of engagement for institutional capital. Is this the ultimate validation, or just the beginning of something even bigger? Next, get ready for the buzz around a new venture aiming to supercharge the infrastructure behind the scenes. This isn't about the coins themselves, but the very foundation they're built on. With a massive IPO filing, this is a clear signal of Wall Street's deepening interest and a look at who's building the future. And finally, we're diving deep into a comparison that suggests a massive revaluation for a foundational digital asset. Could it be worth hundreds of thousands of dollars? We're unpacking the analysis that's setting the crypto world abuzz. Stick around because you need to know this. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Digital silver's strategic leap. Canadian crypto firm Luxxfolio is making a significant strategic shift, redirecting its focus towards Litecoin, LTC, and preparing to raise up to $73 million in new funding. This move signals a strong conviction in Litecoin's potential, especially as it's increasingly recognized for its faster transactions and lower fees compared to the market leader, Bitcoin. Litecoin, often dubbed the digital silver to Bitcoin's digital gold, was created in 2011 by Charlie Lee. Its technological architecture allows for a block generation time of just 2.5 minutes, a substantial improvement over Bitcoin's 10-minute block time. This faster processing capability enhances its scalability and makes it more appealing for everyday transactions. Furthermore, Litecoin utilizes the script proof-of-work algorithm, which is less energy-intensive and more accessible for mining using consumer-grade hardware, broadening its decentralization potential. The circulating supply of Litecoin is approximately 76.22 million coins, with a maximum cap of 84 million. This contrasts with Bitcoin's 21 million cap, making Litecoin more accessible to a wider range of investors and potentially contributing to its utility as a medium of exchange. Recent market analyses have projected a potential price target of $626 for Litecoin by 2023, fueled by growing adoption and advancements like the integration of the Lightning Network, which is designed to facilitate rapid microtransactions. Luxxfolio's pivot aligns with a broader trend in the cryptocurrency industry, where altcoins offering clear real-world use cases and practical applications are gaining traction. Litecoin has seen increasing merchant acceptance, with companies like Travala, eGifter, and RE/MAX integrating it as a payment option. Its adoption is also growing in key markets such as Japan, South Korea, and the United States. The Litecoin Foundation actively supports this growth through educational initiatives and development efforts, reinforcing Litecoin's position as a viable alternative for both investment and transactional purposes. The company's fundraising efforts reflect a calculated optimism regarding Litecoin's future trajectory. Analysts point to upcoming developments, such as the integration of the Mimble-Wimble privacy protocol, which promises to enhance transaction privacy and scalability. As the crypto market continues its dynamic evolution, Litecoin's unique positioning, offering a blend of Bitcoin's established security with enhanced transaction efficiency, presents a compelling opportunity for investors seeking to diversify their digital asset portfolios. This strategic focus by Luxxfolio highlights the growing institutional interest in altcoins with robust utility. The community is buzzing with discussions about how this increased backing and focus on technological upgrades will impact Litecoin's market performance and its digital silver narrative. But is this a sign of things to come for other digital assets? We'll explore how institutional capital is reshaping the flow of another major cryptocurrency next. Bitcoin's golden valuation. Recent analyses are suggesting that Bitcoin might be significantly undervalued when compared to gold, with a calculated fair value potentially reaching as high as $126,000. This bold claim is based on comparing market capitalization ratios and supply dynamics between the two assets. Gold has historically served as a benchmark for value storage and a hedge against inflation, possessing a global market capitalization estimated in the trillions of dollars. Bitcoin, often referred to as digital gold, shares many of these perceived qualities, including scarcity due to its fixed supply cap of 21 million coins. However, its market capitalization, while substantial, is still considerably lower than that of gold. The argument for Bitcoin's undervaluation stems from the idea that as digital scarcity and adoption grow, Bitcoin should command a valuation closer to that of gold, adjusted for differences in market characteristics and utility. Proponents of this high valuation often point to Bitcoin's technological advantages, such as its decentralized nature, global accessibility, and programmability, which gold inherently lacks. Furthermore, as institutional adoption increases and regulatory clarity improves, Bitcoin's perceived risk profile may decrease, further justifying a higher valuation. The comparison often involves looking at metrics like the total addressable market for store of value assets and the network effects that Bitcoin has achieved. Some analyses delve into the specific properties that make gold a reliable store of value, such as its physical tangibility, historical acceptance, and industrial uses. They then attempt to quantify how Bitcoin's digital properties, like divisibility, portability, and censorship resistance, translate into a comparable or even superior value proposition in the digital age. The $126,000 figure, for instance, might be derived from models that equate Bitcoin's supply scarcity and demand drivers to those of gold, adjusted for factors like liquidity, volatility, and technological adoption curves. This perspective suggests that as the world continues its digital transformation, assets that are native to the digital realm and possess sound monetary properties, like Bitcoin, are poised for significant revaluation. The comparison to gold serves as a potent narrative for traditional investors who are seeking to understand Bitcoin's potential within a familiar framework of value storage. However, it's crucial to note that such valuations are highly speculative and depend on numerous factors, including continued technological development, widespread adoption, and a stable regulatory environment. Critics often point to Bitcoin's inherent volatility and the lack of a physical store of value compared to gold as reasons why such a direct valuation comparison might be flawed. Audience impact. This comparison is sparking intense debate, with many seeing it as a bullish indicator for Bitcoin's future, while others remain skeptical about directly equating digital assets with traditional ones. While we talk about value, we're also seeing how new financial products are dramatically changing how capital flows into the crypto space. ETFs rewiring Bitcoin's market dynamics. U.S. Spot Bitcoin Exchange Traded Funds, ETFs, are rapidly transforming the cryptocurrency landscape, now driving between $5 billion and $10 billion in daily trading volume. This surge places their activity on par with, and often exceeding, that of major global crypto exchanges, highlighting a profound shift in institutional adoption and market liquidity. These ETFs have become a critical gateway for traditional capital to enter the digital asset space. Data indicates that the trading volume generated by these U.S. spot Bitcoin ETFs now accounts for approximately 67% of the total Bitcoin spot trading volume on Binance, the world's largest cryptocurrency exchange. This statistic underscores the significant impact these regulated investment vehicles are having on market dynamics, influencing price discovery and overall liquidity. While Binance still leads in overall daily Bitcoin spot trading volume, estimated at around $4.1 billion, the ETF's substantial contribution signifies a powerful endorsement from institutional investors and a growing demand for accessible, regulated Bitcoin exposure. The success of Bitcoin ETFs is also drawing attention to similar products for other digital assets, though adoption rates vary. For instance, Ethereum ETFs, while currently representing only about 4% of Ethereum's total spot trading volume, have recently seen impressive inflows, attracting $1.24 billion over a 5-day period, compared to $571 million for Bitcoin ETFs in the same timeframe. This trend in capital allocation is further exemplified by BlackRock's iShares Ethereum Trust, ETHA, which experienced substantial single-day inflows. This suggests a growing appetite for diversified digital asset exposure beyond just Bitcoin. BlackRock's influence is also evident in the Bitcoin ETF market, where its iShares Bitcoin Trust, IBIT, leads in assets under management. Following a recent market correction and subsequent dovish comments from the Federal Reserve, investor sentiment has improved, leading ETFs to break a 6-day outflow streak, with IBIT and Fidelity's Wise Origin Bitcoin Fund, FBTC, seeing significant net inflows. The increasing accumulation of Bitcoin and Ethereum by these ETFs is set to redefine custody practices within the crypto industry. BlackRock's Ethereum ETF alone has amassed 3.6 million ETH, positioning it to potentially surpass Coinbase as the second-largest custodian of Ether. This development signals a major shift, with traditional financial institutions increasingly taking over custody roles previously dominated by crypto-native exchanges. As these spot ETFs continue to gain market share and influence, they are solidifying their role as primary drivers of institutional demand and liquidity for digital assets, effectively bridging the gap between traditional finance and the burgeoning crypto economy. Audience impact. This influx of institutional capital via ETFs is seen by many as a major validation of Bitcoin's legitimacy and a bullish signal for its long-term prospects, though some remain cautious about the concentration of assets. It's not just about investing in digital assets, but also building the very infrastructure that supports them. We'll look at a new venture aiming to do just that next. Building the digital asset future, a $200M IPO push. A new special-purpose acquisition company, SPAC, Bitcoin Infrastructure Acquisition, has officially filed with the U.S. Securities and Exchange Commission, SEC, to raise up to $200 million through an initial public offering, IPO. This move signals strong Wall Street interest in backing the critical infrastructure that powers the digital asset ecosystem and Web3 technologies. The SPAC plans to offer 20 million units, each priced at $10, with each unit comprising a share of common stock and half a warrant. The company intends to list on the Nasdaq under the ticker symbol BIXIU. The leadership team brings a wealth of experience from the crypto and finance sectors, aiming to identify and invest in companies that are building the foundational layers of the digital asset economy. This includes businesses focused on blockchain wallets, decentralized finance, DeFi protocols, payment solutions, and cross-border finance. Key figures leading this initiative include Ryan Gentry, formerly head of business development at Lightning Labs, a prominent developer of Bitcoin's Layer 2 Lightning Network. Gentry's background in venture capital, including his time at Multicoin Capital, positions him well to identify promising infrastructure startups. The board also boasts Vikas Mittal, CIO of Meteora Capital, and a veteran of previous SPAC mergers within the digital asset space. Mittal is also involved with another SPAC, CSLM Digital Asset Acquisition Corp. III, which recently completed its own $230 million IPO, indicating a robust market for such ventures. The SPAC's prospectus highlights its strategy to capitalize on the increasing institutional adoption of digital assets and the growing clarity in regulatory frameworks. By focusing on infrastructure, the company aims to support the essential services and technologies that enable the broader adoption and functionality of cryptocurrencies and Web3 applications. This includes critical components like secure custody solutions, efficient payment networks, and innovative DeFi platforms. The timing of this filing is particularly noteworthy, as it follows a significant uptick in SPAC activity within the crypto sector. In the preceding days, two other SPACs raised a combined $575 million, demonstrating a clear trend of traditional finance capital seeking exposure to the digital asset industry through these alternative listing mechanisms. Bitcoin Infrastructure Acquisitions IPO, with Cohen and Company Securities serving as the sole bookrunner, is a testament to this growing Wall Street engagement. The team's expertise is further bolstered by other notable figures in the crypto space, including Parker White, chairman, formerly of Kraken, Matt Lostro, co-founder of Giga Energy, and Tyler Evans, co-founder of UTXO Management. This collective experience is crucial for navigating the complexities of the digital asset market and identifying high-potential infrastructure companies. Audience impact. This development is being closely watched as a strong indicator of Wall Street's commitment to funding the future of digital asset infrastructure, potentially accelerating innovation in the sector. Now that we've looked at how capital is flowing into crypto and how new ventures are being funded, let's turn our attention to the intrinsic value discussions that continue to capture headlines. And that's a wrap on today's critical updates. We saw Luxxfolio pivot to Litecoin, potentially unlocking new value. Bitcoin's fair value might be $126,000, according to some analysts, sparking huge debate. U.S. Spot Bitcoin ETFs are now driving massive daily volumes, rivaling major exchanges. Plus, a new $200 million SPAC is targeting the core infrastructure of the digital asset space. Don't miss out on any of these game-changing moves. Hit that like button, subscribe to Bitcoin Bulletin for all your essential crypto news, ring that notification bell so you're always in the loop, and follow us on all social platforms to join the conversation. We'll see you in the next one.